At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, June 2, 2023, why Li Auto is still a standout among Chinese EV stocks? Li stock is one of the best ways to play the rise of EVs in China. Li Auto is not a perfect situation, and there is a key uncertainty hindering its performance. Some of this uncertainty has cleared up, and may continue to do so. Relative to its peers, Li remains a much stronger vehicle for gaining exposure to the continued rise of EVs in China. As with most stocks, the story with Li Auto, Nasdaq Li, is far from perfect. As I've argued in past coverage of Li stock, there is one major concern with this Chinese electric vehicle manufacturer. At present, this risk is hindering the stock's performance. It also underscores that it's best to think twice before backing up the truck with this name. That said, don't assume that Li is a no-go situation. If you're looking to make a calculated wager on the proliferation of EVs in China, the world's largest EV market, Li continues to be one of your best bet among US-listed Chinese vehicle electrification plays. At least, that's the takeaway, with the latest information available about the company. With metrics such as growth and profitability, the company continues to leave many of its peers in the dust. Li Auto, $29.45. A semi-wait-and-see situation. Sure, on the surface, Li Auto doesn't seem to sport a discounted valuation. Based on sell-side consensus forecasts for 2023 earnings, 64 cents per share, the stock trades at a price-to-earnings multiple of 45.4. Not exactly value stock territory. Still, considering that forecasts call for this company's earnings to rise by more than 70% in 2024, following another big jump in sales, it wouldn't be all that unreasonable for the market to price Li stock at an even higher multiple. Perhaps, with this level of growth, Li deserves a valuation closer to that of the leading global name in the space, Tesla. At current prices, Tesla trades for more than 58 times forward earnings. So, why doesn't Li trade at an even more premium valuation? Like I hinted at above, it all has to do with a key risk with this company: falling margins. The market may be bullish about Li's sales growth potential, but unlike with Tesla, they are less sold on the prospect of Li turning this high sales growth into heavy earnings growth. In short, pricey but not fully priced, this is a semi-wait-and-see situation. The silver lining. Admittedly, the aforementioned situation with Li stock hasn't stopped shares from delivering a solid performance in 2023. Year to date, this EV play is up by nearly 38.5%. However, don't take this performance to mean that, if you've yet to enter a position, you have missed the boat. Shares have bolted higher over the past few months, because of some, but not all, of the semi-wait-and-see uncertainty clearing up. For instance, Li keeps crushing it in vehicle deliveries growth. During May, Li delivered a total of 28,277 vehicles, up 146% year-over-year, and up by double-digit on a sequential, month-over-month basis. In terms of earnings, the company also continues to win back the market's enthusiasm. For the preceding quarter, although there was margin compression, non-GAAP net income nearly tripled year-over-year, and rose 46.1% sequentially. Li's earnings for the quarter came in well ahead of analyst consensus. Guidance for the coming quarters was also very promising. That's where the silver lining comes in. If Li keeps trouncing expectations, with both sales growth and earnings growth, a further clearing of uncertainty could transpire, keeping the stock on an upward trajectory. The most important takeaway: potential upside with Li, at around $29 per share, may go beyond shares merely re-hitting their past high water mark, over $40 per share. The continued adoption of EVs in China points to even more runway. Yes, Li is not the only company with this mega trend in its corner. Other US-listed Chinese EV makers, like NIO and SPANG, also have it on their side. However, while NIO and SPAV have mostly just talked the talk, Li has, without question, walked the walk. Perhaps hitting the sweet spot by focusing on electric SUVs for the mass affluent market, Li has been, and appears poised to continue being, adept at turning this trend into tangible strong fiscal performance. With this, Li stock remains a much stronger vehicle for gaining exposure to the continued rise of EVs in China. Li stock earns a B rating in Portfolio Grader. Thanks for watching. Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.